Good evening, everyone. Okay, so last class we have covered cost and revenue, right? So today we'll start with banking. So you can see in unit number here, chapter number 3.2, banking definition, functions, utility, and principles, page number 118. So here you can see the meaning of banking, okay? So one definition is given, an institution, bank is an institution whose debts, that is bank deposits, are widely accepted in settlement of other people's debt. And one more definition that is given by Crowther, a bank...
বাইদেউ আপুনি সেই ক্ৰোমটোত যে নহয় মিউট হৈ আছে আনমিউট কৰি দিবচোন বাইদেউ ডেস্কটপ পিচিটোত আপোনাৰ ক্ৰোমত মিউট হৈ আছে
Students, can you hear me?
Yes, ma'am.
Okay. So students, today I'm starting with the chapter banking. So that is in page number 118, right? 118. So you can see here the meaning of banking. So here one definition is given. Bank is an institution whose debts, bank deposits are widely accepted in settlement of other people's debts. And another definition that is given by Crowther, you can see, bank collects money from those who have it to spare or who are saving it out of their incomes and lends this money to those who require it. Okay, so that means bank is an institution which accepts deposit from the people who have or who wants to save. Okay, who wants to save, and that money is lended to the people who wants it, right, who requires it. So bank is an institution which accepts deposit from the public, and they provide loans and advances to the public who are in need. So that is the meaning of bank all about. Now, the next topic that is given here, essentials of a sound banking system. Essentials of a sound banking system. So a sound banking system promotes all-round economic development of an economy. A good bank must have the following features, okay? So whenever we talk about a good bank, so we have many banks in our country. We have public sector banks, private sector banks, right? Cooperative banks. So there are many banks. So what are the essentials, or we can say the features of a sound banking system, that we'll call that particular bank is a good one, or sound banking system. So the first one is adequate liquidity. Okay, adequate liquidity. So first one, a bank must keep sufficient cash in hand to meet the claim of depositors, otherwise they would be insolvent. A bank's failure not only affects depositor, but the bank also. People would not keep more funds with banker unless it ensures safety to its customers. So first one says adequate liquidity. So what does it mean? Okay, see, many customers like A, B, C, D, what they do it? They have money, they have extra income. That money, they are going to the bank and saving it into the bank. Why? Because in future, if they need, they can go to the bank and withdraw it. Okay, so when this Mr. A, B, C, D, whenever they are going to the bank after 1 month or maybe after 2 months, going to the bank to withdraw money, and bank is unable to pay. Bank is like, we do not have sufficient cash to pay you. That means what? That means the bank is failure. Okay, the depositor himself, they are not getting their own money, right? And depositors they are depositing their money with the hope that our money is safe, and whenever we will demand, we will get our money. If that particular bank will be unable to give them money, or they do not have any sufficient cash, so that means that banking system is not sound enough. So that is your adequate liquidity. Okay? So a bank must keep sufficient cash. Okay? Then only we'll say that that particular bank is a sound banking system. Fine? Clear? Second one is expansion of banking. Banking facilities should spread throughout the economy. It also cover all sections of the people in need of funds and all productive activities. The less developed regions should get more banking facilities than others. Thus, diffusion of banking offices is essential. So second point says expansion of banks. That means opening up new branches. Okay, when we'll say that good banking system in a particular economy or in a particular country, when number of banks will increase. Okay, when like various branches and the offices of the banks will be open in various regions, like in the nook and corner of the country, and people will get the facility of banking system. Then we'll say that it has a sound banking system. The country has a sound banking system. So banking facilities should be spread throughout the economy. Branches should be opened up, many regions in the rural areas also, in the nook and corners also. Now next one, point number 3, investment and loan policies. So every bank should have some investment schemes so that people can multiply their money, and they should provide loan facility. Okay, whoever wants loan and advances, the bank should provide the loan facility. Then only we'll say that the bank has a sound banking system. A sound banking system must have a sound investment policy whereby it can optimize the twin goals of liquidity and profitability. So twin goal, like, the goal of every bank is liquidity and profitability. Liquidity is what? Whenever liquidity, money, yes, money can be given it to the money, like, hard cash money is here. Whenever the customers will demand for it, whenever customers wants to withdraw money, the bank should have the capacity to pay it. And profitability is like, the bank is also a kind of business. Banks are sitting, they are doing business to earn money. So even they should earn profit. And how they can earn profit? When they will provide loans to the customers, loans to the people. Then only they will be able to earn profit, right? So depositors will be depositing money. So that deposited money will be provided to the public, to the needy one as a loan. And in return, they will charge interest. So that is a kind of your profit. That's a kind of profit for them. So twin goal of the bank should be achieved. So twin goal is what? Liquidity and profitability. You underline that. So twin goal of a sound banking system must have a sound investment policy, and whereby it can optimize the twin goal of liquidity and profitability. So if loan and investments are wrong, a bank suffer loss or face liquidity shortage. A prudent banker should carefully determine the composition and character of its loan and advances so as to optimize earning without endangering safety and solvency. Okay, so that means if banks will take wrong decision, many people will come to the bank and they will ask for loan. And if they will not check properly what kind of loan that people are asking for, okay, so that money that people are asking as a loan, that money, they will be using it for productive purpose, or they will be using it for unproductive purpose, right? Productive purpose means what? People are looking for loan just because they want to start a new business. They want to expand their business. So that's a productive one. Right, that's a productive one. So the bank has to look after whether the person has the capacity to pay or not, the person has the willingness to pay or not, and the person is trustworthy or not, or have the worthiness or not to repay the interest, principal amount and the interest. So here, before giving loan, before giving loan, bank need to determine the composition and the character of its loan, so that bank will not get into any kind of insolvency position. Am I clear to you? Clear? Now next one, human factor. The soundness of a bank depends much on the quality of banker. Banking being a practical affair, rigid application of bank laws are not always fruitful. Much depends on discretion of men piloting the ship. Sound banking thus depends more on banking personnel than on banking law. Okay, so there are many laws applicable to the banks, but the people who are working in the banks, the people who are working or involved in the banking sector, are they following it or not? Okay, so it depends on the human factor. Many laws are prepared. Many laws they need to apply to it, but whether they are applying it or not, whether they are adhering it to the not, that is most important. So if all these points are clear, or we can say all these points ensure that the banking system of a particular economy or country is a sound one. So first one is it should ensure adequate liquidity. Second one is have the provision for expansion of the banking system. Then investment and loan policies, and human factor is another one. So the next topic is like, you can see here, functions of a commercial bank. So what is commercial bank all about? So here it's mentioned, modern commercial banks perform a variety of functions and provide a number of services to its customers. They are regarded as departmental store banks because they provide a wide variety of services to its customers. Okay? So commercial banks, so that the name itself suggesting that commercial banks, they are started, okay, they are started to earn money. Okay, their basic objective is, their basic function is to accept deposit from the public and provide loans and advances to the public. And with that, with the primary objective, with the primary functions, they are also performing various other functions also, like your agency function, general utility function, etc. So now we can see acceptance of deposit is one of the function, advancing loan, general utility functions will go into that. General utility function means like one of the example, yes, locker facility. One of the example is like locker facility. So that is general utility function. Okay, like primary function is what? Primary function is this one, acceptance of deposit, advancing of loan. That is their primary function. Okay, and they have some agency function. Agency function means what? They are act as an agent for the customer. Okay, as an agent for the customer. On the behalf of the customer, they are performing some work. They're performing some functions, like on behalf of the customer, they are paying school fees, yes, bills or school fees to the, to the schools on behalf of the customer, right? So that is your agency function. And general utility function, one of the example is like, apart from your primary functions, we have general utility functions like the bank is providing some locker facility so that customers can keep their important documents in the locker. So that can be one, important documents or jewelry in the locker. So here, credit creation, facilitation of payments through check, transfer of money from one place to the another place, then agency function and other miscellaneous function, okay? Your other general utility functions. So these are various functions performed by commercial bank. Now we'll see what are the important, or we can say the primary function. Okay, so primary function, the first one is your acceptance of deposit. So acceptance of deposit means what? It is one of the primary function, which means accepting deposit from the public. So accepting deposit from the public. So public is coming to the bank and they are depositing money into the bank. Why they are depositing? Because they have surplus money, right? So how they can deposit money? They can deposit money with the help of opening various accounts, okay? So with the help of opening various accounts like current deposits, saving deposit, term deposits, or recurring or cumulative deposit, right? So this is the first primary function of commercial bank. The public, they are depositing money with the help of this type of following accounts, bank accounts. So public can open what? Current account. Okay, remember this, current account. So these are the deposits made into the current account of a bank. Okay, they are most convenient to the businessmen, public authorities, and joint stock companies because there are no restriction on the number and the amount of withdrawals. Fine? So current deposit account, with the help of current deposit account also, money can be deposited, right? And this particular account, current deposit account, can be opened by only businessmen and the public authorities and the joint stock companies, right? Joint stock companies or any private companies or any businessman, they can open current deposit account. Fine? And there is no interest, rate of interest. Interest is paid to the current deposit account holders. Even if you are depositing crores of rupees, lakhs of rupees, the bank will not give any interest to the current deposit account holders. Fine? And one of the advantage of current deposit account is like there is no restriction on the number and the amount of withdrawals. There is no restriction. Whenever in one day you can deposit money anytime, right? Like number of times, many number of times, anytime you can deposit, right? So see, as a businessman, as a trader, your customer will deposit money. Number of times a customer will deposit money, right, in your account if you're a businessman, if you're a trader. So there is no restriction. If you open one current account, so there is no restriction in that, and there is no restriction on the amount also. And no interest is provided. Fine? Am I clear to you? Okay. Now next one is saving deposit. So you, me, we have saving deposit accounts, right? So these accounts are made into a saving bank account of the bank. They are most convenient to the small businessmen, salaried employees, artisans, and the people belonging to the low and middle income groups. The interest paid on this deposit is comparatively low and is around 4% per annum, right? So you and me, a salaried person, a small businessman, okay, any trader, any artisan, housewife, okay? So anyone can open saving deposit account, and in this account, the bank provides rate of interest around 4%. Okay, so nowadays it's around, some banks are providing 2.5% or 3%, not more than that, fine? And next is term deposit. Term deposit, the name itself suggests term deposit, like you are opening that particular bank account for a specific time period. Say you are opening for 1 year, you're opening for 5 years, you're opening for 10 years. So that is your term deposit account. So you are keeping your money for a definite period of time, for a particular period of time. So they are also called fixed deposit because the money is deposited with the bank for a fixed period of time. Okay, so term deposit account or fixed deposit account, it is same because you are keeping your money for a fixed period of time, for a definite period of time, a fixed amount of money. So the deposit can be withdrawn after the expiry of the maturity period. Suppose, you have opened one term deposit account for 1 year. So after 1 year, okay, you will get your principal amount plus interest. Okay? Say for 5 years, you will get your, after 5 years, after 5 years, That will be your maturity date, okay, maturity year. So you will get your principal amount plus interest. And the minimum period of deposit is 15 days. The rate of interest varies from 6% per annum to 12%. So nowadays, banks are not giving 12%. Maximum 7.3, 7.5 is given. Maximum, I'm telling you. Okay, otherwise you consider it's up to 6%. So here, like from 5% to 6% or maximum 7% is provided nowadays by the bank. Now next is your recurring or cumulative deposit. So recurring, like, recurring means the customer is paying a fixed amount every month for a fixed period of time, right? Suppose you want to open one recurring deposit account. That means what you will be doing it, you have surplus money every month, 1,000. So every month, 1,000 fixed. Okay, fixed you will pay. Suppose you have decided the year 5 years. I will pay it for 5 years. So every month you will pay 1,000 every month for next 5 years. Right? That means you will pay it for 60 months. So how much you will pay? 60,000. So on maturity, you will get 60,000 plus interest, right? So that is your recurring deposit account. In term deposit account, you are paying the money, lump sum money at one time. Okay, you have 50,000, you are paying it for 5 years. So that is term deposit account. But recurring deposit account, you are paying every month a fixed amount of money. Okay? So these deposits are very convenient to those who cannot save huge amount at a time. These deposits carry interest at a rate more than that of saving bank and less than that of term deposit. So more than saving deposit and less than term deposit. So that is your recurring deposit account. Am I clear to you? So here primary function of commercial bank is accepting deposit. So how can a bank accept deposit? By providing or opening various accounts, okay? A customer can deposit money by opening current deposit account, saving deposit account, term deposit, that is also called as fixed deposit account, and recurring or cumulative deposit account. Am I clear? Okay. Now, the second one is advancing loans and advances. That means payment of loans and advances. Because people are coming to the bank and they are in need of money. Okay, they're in need of money. Maybe they want to buy something. They want to open a new, start a new business, or they want to expand their business. So for that purpose, they want money. So now, what are the various ways that a person, okay, can take loan from the bank? So another primary function of the commercial bank is to give loans and advances to different sections of the public, like traders. So traders can take loan, industrialists can take loan, the farmers, the artisans, okay, agriculturists. So anyone can apply for loan in the bank. So the first one is demand loan or call loan. A demand loan is a loan that should be repaid on demand by the bank. It doesn't have a specified maturity period. Okay, so the first one is demand loan, or we can say call loan. A demand loan is a loan that should be repaid on demand by the bank. It doesn't have a specified maturity period. This loan is a kind of advance made with or without security. These are also called call loans. Normally, call loans are given to another banks or financial institutions for a day or a few days. Okay, so this is also called call money. Okay, this is also called call money or call loan. So loan taken for a very short period of time. Maybe a day, and if it's like a holiday, maybe it will be 2 days, or like few days, fine? And here, the rate of interest is very volatile. Okay, it varies very frequently. Okay, and the loan can be given by the bank to another financial institution, or one bank to the another bank, or one bank to the another financial institution in case of any scarcity. Fine? And there is no security. So this loan is made with or without security. Fine? So sometimes there is no security. Okay, without security, loan is given. Fine? Okay. Now next one is short-term loan. These loans are given for a specified short period. They are sanctioned to businessmen and farmers to finance working capital. Individuals may also receive such loans and personal loans. They are given against some security. Okay, so short-term loans are given against some security. So that is your short-term loan. Now next is your cash credit. Okay, so cash credit is an arrangement by which bank allows its customer to borrow money up to a specified limit from an account open for the purpose. Okay, so suppose a businessman is looking for a loan, a bank account is open, okay, and whatever the amount for a specified limit the person has asked for loan, that amount will be credited to his account. And whatever the money, suppose like today he wants 50,000, so he can withdraw up to that amount, and interest will be charged on that withdrawal amount only. And after that again, if he will withdraw, and on that amount, interest will be charged. So here, it is an arrangement by which the bank allows its customer to borrow money up to a specified limit from an account open for the purpose. For whatever purpose the person has taken loan, okay, money will be deposited, and the customers did not withdraw the entire amount. He need not withdraw. He can withdraw in installments also. Fine? Now, next one is overdraft. Overdraft. Sleepy? Sleepy. So, what is overdraft? So, this is a facility allowed by the bank to the current account holders. Okay, so this facility is given only to the current account holders. Okay, so if you want overdraft facility, you need to have a current account. Okay, so they are allowed to withdraw money with or without security in excess of the balance available in their account up to a limit. Interest is charged on the amount of actual withdrawal. So overdraft. So overdraft is a kind of, again, loan, okay, and interest is charged by the bank on that, and this facility is given only to the current account holders. Fine? And what is it? What is overdraft? Overdraft means, suppose you have in your account 2 lakhs rupees and you want to withdraw more than 2 lakhs. Okay? So that is called overdraft. So more than your available balance, available bank balance, if you're withdrawing more than that amount, so that is called overdraft. That means you're withdrawing more than your available balance. Fine? And that is given only to the current account holders. Because bank, that particular customer should have good reputation with the bank, should have like good credit worthiness with the bank. Then only bank will agree to it. Because bank know that this person, every day, this person has many transactions. Every day, like, money is coming and, yes, money is deposited into the account. So the bank knows that this person has the credit worthiness. So then only overdraft facility is given. Now next one is discounting of bill of exchange. So you have studied bill of exchange in your 11th standard. So discounting of bill is what? A bill is with you and a later date is given. So in the bill, the date is given, suppose 1st of June. Now it is like April, last April. Okay, you want money on, suppose, 2nd May. But on the bill, what is the date given? 1st June is given, suppose. So you can go to the bank and you can discount it. That means before maturity period. Okay, before maturity period, you can discount your bill. That means, suppose your bill is for 50,000. So you have discounted the bill means the bank will give you approximately, suppose I'm just giving you a vague idea, the bank is giving you 45,000 and 5,000 the bank has taken. Bank has taken. So that is the profit of the bank. That is the profit of the bank, right? And when there will be a maturity period, maturity date on June, the bank will be collecting that money from the drawee. Fine? Am I clear to you? Okay. So bill of exchange are undertakings written by the buyers and given to sellers when the transaction is made on credit basis. Okay? So that means what? That means you have, so bill of exchange when it is prepared, when the transaction is between seller and the buyer is on credit basis, and a bill is given for a later date, right? So that is credit basis. I will not pay today, a bill is given to you, date is on June, right? So the buyer undertakes to make payment after a specified period, say 1st June, or on a specified future date. The traders who possess such bill of exchange with them may approach the bank. So approaching, on 2nd May, you are approaching the bank, and the bank for discounting of the bill of exchange when they need money. Okay, so bank will discount your bill. You will get your money before maturity period. But bank will keep some amount of money from you. So that is also one of the, giving advances to the customer. Now next is your credit card. Okay, credit card. So credit card is also one of the facility. Even if you do not have money into your bank account, if you're using credit card, okay, you can go to a restaurant, you can eat something, you can go for shopping, you can buy many things, and on later date, you can pay the money. So that is the utility of the credit card. Fine. So nowadays, the banks have devised new methods of giving loan to the customer. One such popular method is issuance of the credit card. A credit card holder can use his card to purchase goods on credit from specified firms and shops, and also withdraw cash subject to certain regulations. Okay? Suppose like your every month your salary credits on 5th, okay? And by 20th of every month your money finish. You know that every month 1 lakh will be credited to your account. जब तक 20 आ जाता है, 20 तारीख हो जाता है, तब तक खाके पी के पार्टी करके पैसा खत्म. Okay? उसके बाद you have a credit card. Whenever you are going to the restaurant, credit card scratch. You are going for shopping, credit card scratch. তাৰপিছত last to me, you have to give bill. Right? So that's a kind of your short-time loan given by the bank. Right? So bank is giving loan for short time. Because you do not have money into your bank. So, overdraft is like you are getting money. You're getting money, and that is given only to the, current account holders. But credit card, I can also get, you can also get. So a limit will be given to you. It's not that unlimited. But, depend upon the credit worthiness of the person, depend upon the salary of the person, depend upon the, if the person is a businessman, depend upon his income, regular income, depend upon that, a limit is given. Suppose 50,000 limit a month, 1 lakh limit a month, 3 lakhs limit a month. It depends upon that person's income. Okay, limit will be set to the customer. So credit limit is given. If a credit card is issued by the bank to the customer, a credit limit is given to you that you can use or you can take credit up to 50,000. So once 50,000 is finished, your card will not be accepted by any firm or any shop. Fine. So that is your credit card all about. Understood? Okay. Now next is credit, creation of credit. The commercial banks create credit. This is a unique function of commercial bank. Credit is created from out of the primary deposits of money the customer received from the public. Part of the total amount of this deposit is given as loans and advances to its customer. Okay, so creation of credit is like, it's like we can say loan only. Whatever the amount, the primary deposit, whatever the amount that is like deposited by the customer, from that amount is utilized for the loan purpose. So that primary deposit is utilized by the bank for, or we can say to create credit. So that is creation of credit all about. So an account is open against the person who will be taking loan. So that way your credit is created. Fine? So credit is created from primary deposits of money the customer received from the bank. So underline that. So how your credit is created? So credit is created from the primary deposit. Fine? Credit is created from the primary deposit that is given by the customers to the bank. Fine. Okay, then that's all for today, up to point number 3. So we'll be discussing agency functions in the next class. Fine? Understood? Fine. Thank you so much.